Hey guys, welcome back. Hope you had a good weekend. It is March 14th, 2022. We're going to look at a little technical analysis, SPY. I think the market might be crashing this week. Today, how weak it was, and after Friday coming into close, the fact that we didn't have much bounce, much support, all the TAs bearish on it. We'll look at that. Sub up, like up, comment down. Happy Money sticks around. We have a Twitter you can follow us on at Happy Money YT, as well as a Discord server. Link for that is in the description. Free to join on there. Good weekend, and back to it. GME earnings on Thursday. Like I was saying on SPY, it stayed bearish here. We've got bearish MACD, red under the 9, and any bounce has just been met with resistance to keep everything bearish looking. So now that we're not really, we haven't flipped momentum, and we only have one really support left down here at that 410. This might be a big week, kind of like this week, or even this week back here, kind of mid to end January, those few days. So we'll see. SPY coming down that heavy, probably not something like COVID, probably more like 2008 or 2001. SPY coming down that heavy, or even like 2018, like the repo crisis or something here. Could bring GME down, of course, because it's bringing down everything. A lot of stuff is having a hard time today, and even coming into close on Friday. Here's 2011. I don't remember what that was from. So here's let's see, is this it? Yeah, so I think the crash in 2008 I would call right here, kind of this area. These like 1 or 2 weeks, it kind of crashed there, and it kind of had another crash up here. I think for where we are right now on the SPY, I think we've kind of seen one of these already, maybe even 2 of them. I think we might be getting close to one of these bigger moves. It doesn't mean it's over, as you can see if you zoom out here. This isn't over. But you know, it's formed kind of a head and shoulders double top thing here. Kind of like we've done. This chart looks very similar to ours right now, actually. This was back in 2008, and you have one volatile week, you have a bounce, and then I feel like this week is maybe going to look similar to this. But then of course you flatten out. You know, Ukraine and Russia are at peace, so you have a little bounce, and then interest rates have to go up, so you keep coming down, and then everyone's scared in the market, and then oh yeah, all those people that weren't paying for their houses because the government was paying for them, they've all had to foreclose. Oh yeah, rent. And then everyone's so scared of the market, they've all sold everything, and then big money starts buying up. So that could take another year from where we are now before we find a bottom on the market. Could even be longer than that. We could be more like in the 70s where it's many years. At any rate, GME, our hedge, I still think it is in play as a good hedge. I think it'll squeeze similar to how Volkswagen squeezed during that 2008 crash I showed you. That was when Volkswagen dipped and squeezed. And I think GME could be getting there very soon. Like I said, with the SPY coming down, this could be GME's proper final dip before squeeze. I see 45 on the table as the final support, and today I might sound chipper in my voice, mostly because the move to me is more confirmed today and last week, and it's been kind of back and forth with what I've thought was going on, because I wasn't sure if this whole thing was the trough, or if this little thing was the trough and this was the pinch. I think with us breaking this low today on a massive day, actually, we're having a bounce now into close, but we were down 16 something percent with volume, and the fact that it broke that support earlier in the day, I was like, wow, it looks like we're gonna hold up, and it seemed like it, because it was bouncing pretty heavy right at that higher low, but then it just flushed through there with the market. Market wasn't too bad today, but pretty bad. But GME breaking through that support to me means, I think, one of 3 things. One is this is still the trough period, like here before the pinch, and they're just able to short it to a new low, because all back here was always higher lows in the second test. Low, higher low, low, higher low, low, higher low. So it's possible that we're still in that trough period and they're just able to bring it down here before it rips. I think the probability of that is much lower than this is already was the pinch, but that's not necessarily a bad thing, because I think earnings could be a big deal. And if the stock keeps coming down, I think we're just that much closer to them closing their position, as well as if it's coming down that much, the market's selling off and margin calls are going out anyways, which we've already seen with random stocks ripping. Mullen is one of them I've been watching. And I mean, I've seen on the news and headlines, there's liquidations been going on. Money's being pulled out from here and there. Melvin Capital's probably going to go bust first, with Citadel and Point72 pulling their money out. So yeah, anyways, I think we could be, I think this could have been the move. And I was saying that before. I've said it a few of these different trading days back here in the last month or so. I guess that was 2 months. No, probably like the last month. I've been like, all right, this could have been the pinch, because the move from the bottom to the top was actually the same. This move was about 50-something% from here, from the bottom of the trough to the top of the top of this pinch, which is the same as this bottom of this trough to the top of that pinch. Same with here. It was the same percentage move on all of these, including this one. This one just looked much different, much smaller, because we're so much lower. And then, yeah, but basically, so if this is the pinch, or was the pinch, the pre-earnings pinch we were expecting, then I think we're in a phase more like right here. So we had our trough. This area is this area, and then this area is this area, and now we are somewhere in this area right here. So today is kind of confirming that, breaking through lows. So it could be even further down this chart, since here was the support and here's breaking lows. So here would be our support and here's breaking. We could say we're maybe down here. Just looking at this one. Other times it didn't really happen because we're making higher lows. So here we had the trough and the pinch, and then we actually didn't make a new low past that support, so it just made a higher trough. So this is the only one we really have to look at, basically, because we actually broke through that support. That said, I expect probably a little bounce. I was saying end of day or tomorrow, just because we're so oversold. Looks like we're getting some of it today. I think probably more will come tomorrow, before probably more downside into Tuesday, Wednesday, Thursday. Yeah, Thursday into close, it's probably going to keep coming down. And then even Thursday after hours, when we get GME earnings, could beat on all expectations, and it could still get shorted. They could even beat on all expectations and announce, their NFT marketplace, and announce that Elon Musk is going to partner, and say whatever they want to say, and it could literally still get shorted. So don't be surprised if that is the case. I think it's possible it won't be, and all that bullish news will actually bring money into it, but it depends on a lot of other factors other than just what we think going on. And overall market is definitely a big one of them. And if SPY is crashing this week, that's going to have an effect. So what I think could happen is it shorts into the earnings, and it's very bullish, and we have a bit of a spike from that, because there's also lots of FTDs I think they have to start covering at some point, even if this was the pinch. So we could see something similar to, right here this time. So we had our pinch, and then there was shorting into earnings like every time, and then the big gap down after earnings released. Oh, earnings is so good, this is awful, let's short it. And then big rally on that next day. I think they were probably having to cover something on that day in these next few days. But then the downtrend continued. So I think we could see something like this if it's bullish news or bullish enough earnings that they're basically covering some, or using that as an excuse of why the stock is rallying. Or it could be the squeeze. Honestly, it could just start the squeeze from right there, because big money's coming in and shorts are being margin called and liquidated. Oh, here was the other one, actually. This was the big one. So they shorted it down after earnings, and then huge rip up. This was actually the one I was thinking of. Much bigger, much bigger. This was very surprising. But then still after that, they just kept shorting it down. But actually, that was the low. That's interesting. But they kept shorting it back down and made this other trough before another rally. So those are the three scenarios. I'm not sure if you caught them all. I was kind of spacing. I was kind of sporadic on them. Basically, that this is kind of a false breakout, and this is still the trough, and we're going to pinch. into earnings and rally, or this is after the pinch and we're being shorted into earnings like here, and pretty much like every time we've been shorted into earnings or just after. And it looks like we're being shorted into earnings, and then yeah, I guess third scenario is, which I didn't say, it was just we're out of the cycle altogether. But this does look very, very similar to the cycle, but we could just be out of the cycle altogether and just have to wait for bullish momentum and trade it like that. As far as earnings and how that goes, this is kind of separate from that. Earnings, I think we could literally start the squeeze from there. I also think we could have a rip. Market makers aren't pricing in a big move at all for earnings, smaller than they've done for a long time, which is kind of interesting. So yeah, it could make a big move for earnings, and it might just be, you know, a lower high like 120 or 114, and then they continue their shorting campaign, and I see the final support at that 45, and that's if the market is crashing. I don't think, well, not necessarily. If we just keep staying bearish, GME could just keep coming down with the overall market. I do see that as a plausibility also. Now that we've seen that they can break this support, and market's bad, but it wasn't crashing necessarily. So if we are in this cycle and we're being short into earnings, if we're repeating historical price action, then it would look like this after earnings. Another one of these, you know, months drawdowns, 1 or 2 months, bringing it down, and then we'll see. But I'm hyped for this earnings. And I think it very well could be what the catalyst is needed for whatever, a dividend or the marketplace, whatever catalyst is needed to start a squeeze. But even if GME does come down after earnings, before earnings, or shorts after, and we have another big move down, it's not to say that the squeeze is over. I don't think it's happening. The lower we go and the further this goes on, the closer we are to shorts closing, covering and closing their positions. Just the same way that when you buy a stock, if you bought it for $40 and it's going up and you're getting excited and you doubled your money, you 150%, 200%, the higher this goes, the closer you are to start selling, right? I mean, logic would say. So the higher a stock goes and you're long on it, the more likely you're to sell. Every dollar it goes up, you're more likely to sell because you're making more and more money. So it's the exact same thing with the shorts, even though the shorts are probably so underwater that they probably can't make out without being bankrupt. Maybe some can, but the ones that can't, doesn't matter. But the ones that maybe can, they might be waiting for this to come down enough, just flipped in reverse. Because as it's coming down, their position is looking less and less of a threat, and they want to close it. And if they open a short up here, then they're profitable. You know, if they open a short any higher than they are right now, they're profitable. So that's kind of what I'm thinking as far as if it's coming down, if we're going to see these lower supports of 45. But all that being said, I think this earnings could be a big one. And kind of my plan with it, a lot of volume today, which is good. I know it's to the downside, but shares moving is a good thing for GameStop. My plan with it, because I had calls on margin, or sorry, I had shares on margin, and then I was selling covered calls, and GME was coming down too much and turned bearish, and I was starting to think, I'm not sure about this, because I wasn't sure if this was the pinch or not. We just went over. So luckily the other day on Thursday, I think on my video, I said I sold my shares of margin because I can't hold a margin position coming if it's going to come down more. And I did think it was going to come down more. So I sold them here and I opened up a bearish play. I wish I held it longer, of course. Made a little bit on that bearish play, but what I did is I started shorting puts. So bullish play, and basically I'm shorting puts into the downward momentum, trying to outpace GME going down to the downside with shorting puts, because that's a lot easier to maintain margin with. So basically I have a 93 strike puts I shorted, which of course are in the money now. And I will, if GME's not above 93, I'll roll it to a lower strike. These puts were, I think, 100. Yeah, these were 103 puts that I had last week. And then I was able to basically roll them for a credit all the way down to, 83. 83. They were 93 last week, and I rolled them all the way down to 83 for credit. So basically, I received credit an extra week of time, and now I have 83. So now I'm going to buy 100 shares, or rather 400 shares at $83. And by the end of Friday, if we're not above 83, I will roll it down for more of a credit. And I'll roll it down as many dollars as I can and still receive a credit just on the weekly time frame. And I'll try and roll this thing all the way down if it keeps going down and down and down. What I will do though, and I also actually today I opened up another short put at a 70 strike because I still have some buying power on there. So those are both down now, of course, because I didn't time it right here. I kind of opened them up here and here. But what I'm going to do is I'm going to close those puts when I see. I'm just going to wait for bullish momentum, and this is separate from earnings. Actually, yeah. Before that, I'm going to close these puts, hopefully not for a loss, and it's for small gain by earnings. There's a reason I'm going to do that. So I'm hoping a bounce. It might be a bounce the next couple days into earnings. We'll see. But basically, options you can't buy in extended hours. Shares I can buy in extended hours. Come Wednesday, I think it's Thursday after close. I'll have to check, but I think it's Thursday after close. So come Thursday, I'm going to buy to close these short puts I have, which will give me my buying power back. And with my buying power, I can buy shares. Here's the short puts. I've got two. See, look, now it's down 200%. This thing, that's crazy. By way to open this up right now to receive 200% more dollars to open it. This one's down 46 to open this one up today. Big day on GME. We haven't had this big of a day on GME yet. Or not yet, but in a while. So anyways, on Thursday, I'm going to buy to close these, and hopefully it's not for a loss. So then when earnings comes out, if it's bullish and GME starts to go, I can immediately buy shares, and I'll buy them on this account with margin, extended hours, because I want exposure with shares to a big upside pinch or squeeze. I don't want to be doing short puts. So I'll close these out. I'll have my buying power from these, and I'll buy shares, and I'll do it extended hours. But if it doesn't start ripping, then I'll just have capital in here, and the next day on Friday, I can either decide, okay, it's going to go up or it's going to go down based on TA and on earnings, and try and ride it down more short puts or buy shares. The TA I'm looking for on bullishness by buying shares in the margin account, I'm going to look for hourly. I'm looking green over the 9, just like we had here. This didn't pan out, but this is basically what I'm looking for. Green over the 9 and bullish MACD. So that's what I'm looking for. I'd like to see some volume with it also, but I think so much downward momentum. I don't want to get shaken out, kind of like here. This is kind of a false breakout, but this is basically what I'm looking for. And I think we've come down low enough. We'll probably keep kind of coming down and have little bounces, but for us to actually flip bullish on the MACD, and as well as a big green over the 9, or just a green over the 9 with volume, I think we could be set up, because the other pinches, you didn't always have a longer time frame rally or momentum confirmation. So back here, it was, you maybe saw it on the 4 hour, but by the daily, you kind of missed a lot of the move. So I'm going to play like I did in February and look at the hourly. So here you could have, but I don't know if we're going to have this kind of stuff. I think we already maybe had our pinch. So at this point, it's kind of back to OG TA on it, I think. And a lot of it's going to be shaken up with earnings, though. We got to see what's going on with that. Oh, that was a lot. Okay. I made like $4 on a SPY call today. So stoked. Let's see what else. Oh, I had a short position on Clove. Actually, I did pretty well on that Clove. I bought shares on the bottom, sold cover calls in the rip, and then actually got exercised. I was meaning to roll them. I accidentally didn't, or they got assigned. Closed the Clover. I sold an extra call on it, I guess, so I did buy to close those shares. Wish, bought back the cover call. Here's some of the positions I opened up. These are just weeklies, just for kind of this dip bounce. So I'll probably get out of them tomorrow. Maybe the next day, but probably tomorrow. There's that little SPY move. So not a whole lot. I do have some buying power left now, though, now that I'm out of Clove. Yeah, I think I didn't realize I had just an open short position on Clove. That was eating a margin pretty bad. Birds earnings are also this week. I really don't have much bearish positions, so I'm hoping for a bit of a bounce. Now that I have some buying power on SPY, hoping for a bit of a bounce to maybe get some more big downside for Tesla. and maybe SPY, but I think Tesla's got a long ways it could come down. They all look like they're about to just fall through the floor, or at least down to this support. And then if it breaks that, it's gonna be a big drop, I think. And that could be this week. I could be wrong. Powell is talking this week. Actually, I forgot about that. That could move things around. So I got for you guys. We'll see you on Discord. Have a good afternoon. Peace out.